Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Smart Global Holdings stock so we can determine if it's a buy or a sell. Smart Global is a designer, developer, and supplier of electronic subsystems to companies in the computer, industrial, networking, telecommunications, aerospace, and defense markets. They break down their revenue in three categories: intelligent platform solutions, which is 52%, memory solutions, which is 35%, and LED solutions, which is 13%. This percent breakdown is from the company's second quarter 2023 quarterly filings that was done earlier this month. The company is headquartered in Milpitas, California, and was founded in 1988. Let's get started with the model. This is a small cap company, 773 million market cap. They're trading at $16 a share, and they have 49 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have positive free cash flow in 2020, 2021, and 2022. But in the trailing 12 months, it is negative. Since they have strong revenue in the trailing 12 months, that means they're investing a lot in CapEx. CapEx are investments in property, plant, and equipment. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative in 2020, positive after that. Revenue is the sales for the company, and that grows a good amount from 1.1 billion to 1.8 billion. It is flat in the trailing 12 months. Let's look at the capital structure. 370 million of equity, 670 million of debt. They're 36% equity, 64% debt. Their net debt is 300 million. Net debt is debt minus cash. And they have a pretty high WACC, 15.8%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4. That's 535 million. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $500 million. We divide that by 49 million shares. And we get a calculated stock price of $10. They're trading at $16, so they're trading at a 53% premium. It's a sell according to the model. The website Simply Wall Street values them at $18. They're saying it's 13% undervalued. 4 analysts priced this stock, and the average price target is 27. The low is 20, the high is 35. Another 6 analysts priced this stock, and their average price target is 25. This is where the stock has been trading since it IPO'd. It looks like they started trading in mid-2017, and the stock ran up really quickly. It went up about 5x from the IPO within the first 6 to 9 months. The stock struggled from the first quarter of 2018 to mid-2020. Like most semiconductor stocks, it had a really big run-up. It was past $35 at one point, but it came crashing down in 2022. Now it's trading around 16, which is higher than its IPO price. They did a 2-for-1 stock split in the beginning of 2022. I guess the stock price was getting high. So the stock actually hit $70 a share, but when they did the 2-for-1 split, they had to retroactively reduce the previous numbers by 50%. But subsequent to the stock split, the price has not done too well. There are 62 companies in the same industry as Smart Global. If Smart Global has a number in red, their number is worse than the median. If they have a number in blue, it's better than the median. So the average CapEx spend is 1.6 billion. The median is 37 million, which ironically is their number. They're pretty leveraged. Their debt to equity ratio is 1.8, which is a lot higher than the median average. They don't pay a dividend. They have negative free cash flow. And they're a pretty small company, under 800 million market cap, a lot lower than the median average. But they have good ratios. They have a good price to book, a good PE, and a good price to sales. But they have negative free cash flow, the most important ratio we can't look at. Their revenue is more than double their market cap, because a price to sales of 0.5 means your revenue is double your market cap. If it's below 0.5, your revenue is more than double your market cap. They do generate a ton of revenue for the size of the company. It's double the median, smaller than the average. Their 5-year annual revenue growth rate is pretty strong at 12%, and they have a really low ROA and a good ROE. To summarize, I have them trading at a 53% premium. I rank their free cash flow 3 out of 10, their revenue 6 out of 10, and their ratio is 5 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.